What's up, YouTube? It's your boy KO back with another video. Investing for beginners, where and how to start. In this video, I'm gonna break it down in 4 easy to understand step-by-step guide on how to build wealth and how to start your investing journey. If you're new to this video, hit a like, subscribe. It'll help me out a lot. Leave a comment if you got any questions, and make sure y'all stay tuned to the end. I'm giving out a pro tip that I wish I would have got when I started my investing journey. Let's go. Your money not growing, it's shrinking thanks to inflation. You don't need to be rich, just start small and stay consistent. So I'm gonna break this video down in 4 easy to understand step-by-step guide, with the first one being platform. You have to pick a platform. Now, it's a lot of platforms out there, or you might have heard the word broker or brokerage. It's the same thing. Platform, broker, it's the same thing. A broker is on a platform. Now, they got a lot of different platforms out there, but I'm gonna give y'all one that I use and one that's user friendly and really easy to navigate, which is Robinhood. If you don't have a Robinhood account, it's a link in the description. You can sign up, get you a free stock, and start your investment journey, and you will be on your way to investing. That's number 1, platform. Number 2, investment types. You need to know the different type of investment types. So I pulled up a couple examples to show y'all off of Robinhood and show you how simple and easy it is. So it's a few different type of investment types that you can mess with. Crypto, Forex, stocks. It's a different. On here, we talking about investing in stocks. So in stocks, you got different types of stocks. You got growth stocks, you got ETF stocks, and you got dividend stocks. So I'm gonna show you how to build that portfolio up to where it's diversified and it'll work for you. The first stock I'm gonna go with is, we're gonna do an ETF stock. Now, an ETF stock, I'm gonna go with the biggest ETF stock on the stock market, SPY. See, I got it pulled up right here. That's the SPY ETF. And the SPY is an ETF that holds 500 of the biggest companies that's on the stock market. So the easiest way I can make y'all understand this is, think of you going to the grocery store. Think of you want to go get Apple. Now, everybody know what Apple is, Apple phone. Think of Apple in the grocery store. You want to go get apples. So do you want to just go buy Apple, or do you want an ETF? An ETF in the grocery store will be, you just buy the whole aisle the apples in. You got apples in that aisle, oranges, grapes, bananas. You got everything in that aisle. That's what an ETF is. It's a lot of companies under one stock. ETFs is good to start with if you're new and you're a beginner, and it's kind of the way to go. ETF grows about 7 to 10% a year given. So you can do the math on that. So you see right here, we got the SPY. And we got different sectors. You got the financial sector, you got the health sector, you got banking sector, you got different sectors. The SPY picks the best 500 companies and put them under one stock. A growth stock, when we talking about growth stocks, I'm gonna talk about a stock that everybody know, and I'm going with Palantir. Now, when I got in the stock market, Palantir was $50, $60. Do you see how much Palantir is now? And I only been in the stock market maybe 5 months, and I done grew my account to over 25K, starting with just $250. If you watch my older videos, I'll show you how I grew my account from $250 to 10K in 30 days. But Palantir was $50, $60 when I got in. I didn't get Palantir, I missed it, but look at it now. So just imagine if you bought some stocks and they was $50, $60. Now they're $130, $140. You just doubled your money within months. So that's the benefit of having the growth stocks. So you got your growth stock, you got your ETF stocks. Now let's talk about stocks that everybody like to talk about, your dividend stocks. Now dividend stocks is a little different. Dividend stocks kind of don't grow. They kind of stay between a range. So the dividend stock I'm going to talk about today is one that I own, SPG, Simon Property Group. Now this is a stock that owns real estate, that owns like malls. You heard of the Galleria in Houston? They pay rent to Simon Property Group. So a lot of the Lenox Mall, a lot of big malls pay their rent to Simon Property Group. So this is a dividend stock. So what a dividend stock is, a stock that's paying you just for owning it. Now with these dividend stocks, they kind of don't grow. They kind of just stay between a range, but that's good for your money because it keep your money kind of flat, but you do reap the benefits of getting a dividend. So when you get your dividend, just say you got monthly dividend stocks, you got quarterly dividend stocks, you got yearly. So that stock gonna stay the same, but it's gonna actually pay you for owning it. And what you can do is reinvest that dividend to buy more. We're gonna talk about that later. So you got your growth stocks, you got your dividend stocks, and you got your ETF stocks. Them is 3 different type of investment types that you need in your portfolio. And another quick look at Palantir, little pro tip. So take a look at Palantir right here. Now you got the 52-week high and you got the 52-week low. Right now it's kind of close to the high, but you do have the 52-week low. So if you get on Robinhood and you're looking for a stock, try not to get it when it's at the 52-week high. Try to get it when it's at least 20% or lower from the 52-week high. And what that'll do is, if you buy it when it's lower, it give it room to go up. So when you buy it, you probably won't be in negative because it'll go up instead of you buying it at the high and it go down. Just a little pro tip for you. Okay, number 3, reinvest your gains. So when we talking about reinvesting your gains, I'm talking about them dividend stocks. When you get that money from them dividends, if you're on Robinhood, they got something called DRIP, is reinvesting your dividends to buy more stocks. So just say you got Simon Property Group and it's paying you $7 a month. So $7 not enough to buy another whole share, but it's enough to buy a partial share. So what'll happen over time is it'll keep buying partials until it gets you another whole share. So if y'all got any questions about that, leave it down in the comment. I'll try to break it down a little bit more, but reinvest your gains. That's number 3. And number 4, last but not least, stay consistent. That's the biggest part. Stay consistent. Me, I invest like $250 a week into my portfolio. So, I mean, that's sustained. I can do that. That's something that I can do on a consistent level, which is reinvest $250 a week into my portfolio. Now, whatever consistent for you, whatever worked for you, whatever don't hurt your pocket, if it's $50 a week, $50 a month, $100 a month, $100 every 2 weeks, whatever price it is, just try to do it on a consistent level. Hey, if you want to do it easier and you working, like me, I work, I'm a garbage man, and I just put it on auto pay. Just take it out. Just put it in my account every week. Just take it out. It's like I never even made it. I don't even see it. Just come out automatically, go right into my portfolio. And what I do with that portfolio, I take that and I buy more shares. So if you want to build a good portfolio, you want to have at least 10 to 15 different companies, different types of investment types. So I do 15. So how I break mine down is 5 ETFs, 5 dividend stocks, and 5 growth stocks. That way you got a mixture and all, and your portfolio is really diversified. So just say the healthcare sector take a hit. You don't got all healthcare. You kind of got different. You got a lot of all. So it's not going to really kill your portfolio. Just say the car industry take a hit and you got healthcare. It's not going to hurt your portfolio too much. So that's another big thing to remember. Just break it down. 5, or if you do 10, do 3 and leave 1. Or, just break it down and Do it the best way you can. But if you follow these rules, you're going to build out a strong portfolio and you're going to start investing and starting your wealth journey. So if you stay tuned to this part, that means you stay to the end and you want that pro tip. The pro tip that I wish people would have gave me before I started investing is start investing early, even if you just a small account. Thanks to compound interest, time in the market beats time in the market. The earlier you start, the more money you can grow without doing anything. Thanks for watching, y'all. If you like this video, hit a like and subscribe. Make sure y'all stay tuned to the next video I got coming. And God bless y'all. I'm out.